TikTok, Jim Malone here, going live. It is Tuesday, just a tremendous market day. The market has moved up just absolutely amazing. I can't, I can't tell you more. I mean, it just keeps moving up. I'm wondering when there's going to be a pullback, but for right now, not a pullback at all. It just seems like it's moving higher. So definitely, definitely keep your seatbelts. I'm going to be showing you a very nice trade that I think hopefully will work well. It's on a chip maker that you've probably never heard of. It has a $5 billion valuation, and the chipsets that they produce are absolutely vital in the new kind of world that we're in, the cloud computing world, where everything is moving to the cloud, and these chips are basically help the data centers cope with the tremendous amounts of data that's flowing, on this broadcast, as well as gaming and all these things. I mean, for a long time, the chip maker NVIDIA sort of had the graphics processing to itself, but a lot of that's used in the data center, and now it seems like there's some competition. But this stock is setting up really nicely, and I think that it might be something that is of interest. So let's just kind of get into it. The market direction, just amazing. We're moving up again. I mean, the Nasdaq was up 1.46% today. It's over 10,000. I mean, I think we're not going to see. Maybe we're going to see a retracement later when companies start running low on capital. But at least for right now, the Nasdaq seems to be marching higher, and the market is definitely in a confirmed uptrend. So it's not time to be short, but when it comes time, then there'll be opportunities to do that. Just want to show you the spider. It's it's above that 310 level, which is kind of amazing. It's moved up very nicely. When this slide was taken earlier today, it was at 314.28, up $3.66, or about 1.18%, which is truly amazing because the size of the spider is just tremendous. I mean, it represents many people's retirement accounts, and it's about $220 billion worth of capital in that. And it just it covers the entire the entire S&P 500, which is basically really one of the most important broad-based indexes out there. So the fact that it's moved up is just tremendous. Now, even a more important issue, I think that we need to look at, and this is the Invesco QQQ Trust, which covers the Nasdaq 100, and it's just on fire. It's 250 now. This has got to break soon, but for right now, it seems to be moving up, and this is a V-shaped recovery. It looks like. I mean, I thought this was going to be impossible, and I was getting ready to reshort this market, just waiting. I mean, there may be a retest, coming up, but at least for right now, we seem to be moving higher. So there you go. This is up $4 a share, or 1.65%. I mean, the Nasdaq has just been leading everything, and again, it's the techs really that have been leading, that have been totally leading the charge here. So the Invesco QQQ Trust is just moving really, really strongly. Just wanted to show you that one. Okay, let's see. I'm gonna do a let's see. Let's see a first question here. Wow. Okay. A job 99. Thanks. Can you suggest me for MFA? I'm holding these stocks. Okay, well, let me get to that in just a sec. I'm going to go over my trade of the day here, and hopefully I'll give you, this is sort of how I'm trading it. This is sort of how I'm trading it. By the way, for everyone, I guess there's some people looking at finally. I'm on YouTube at youtube.com/Dallas Trading Floor. Then I'm also on Twitch, which I just started broadcasting on. So hopefully people out there, there's big news on Twitch today, by the way, because Microsoft sort of threw in the towel with Mixer. I don't know if you're a gamer or not, but Mixer was the Microsoft platform. And it looks like Twitch is going to basically eat their lunch. I mean, the Mixer users are going to be moved over to a Facebook platform, but Twitch wins in terms of gaming, and hopefully people on the gaming platform of Twitch are looking at possibly trading stocks. It's kind of like a game, hopefully, that you can win at, and it's kind of like pays you money if you do it right. So anyways, out there, I've just started broadcasting on Twitch. I'm also on Periscope, PSCP/ Trading Floor. I'm on Periscope, so that's easy to pick up if in case you you want to take a look at the charts that I'm showing. If you're on Twitter, right? I mean, you're on a TikTok right now. The thing is, under my profile, which is at JKMALONE, there's a little link. You can just click on that, and that's how you can join the trade alerts. And it's totally free. And I just kind of break down the trade of the days, and when I have a particular trade. I was going to try to get that up, but my mail server kind of was running slow. So I'll have that hopefully after the broadcast today. But if you want to get the trade and that I have for the day, just go to if you're DallasTradingFloor.com, or if you want to get if you want to go from TikTok, just go to my profile, just hit the button there, and you just fill out the form, and I'll get it right out to you as quick as possible. Of course, it's totally free, so you'll get that going. All right, so let me just go quickly through the trade of the day here that I've got going on, and I just kind of want to show you that. That trade. So let me just get that up here. There we go. I think that's the trade of the day. Great. Okay. I'm getting better at this. I'm getting better at this. My trade of the day is on a stock, a chipmaker, IHPI, IMFI. They make chips for the data center, and all the streaming data that's capping is running through these data centers. So latency is a real problem on the routers, and these chips basically process just the torrents of data that are coming through. It's got a very nice pattern it's setting up. When this slide was taken, it was trading at 116. It was up about 150, or about 1.3%. It's setting up very nicely as it's bounced off the 50-day moving average, and it currently has a very strong relative strength line. This is 95 on the RSI, the relative strength. Also, it has a composite rating I want to show you of a 98. And let me kind of show you how this one sets up, how I'm sort of in this stock. Oh goodness, I didn't go over the best. I'd like that. When I move these over to Google Slides, sometimes it doesn't get the boxing correct. But here's how it works. And this is an actual trade that I just made. So these are actual real numbers. Basically, the cost of the cost for 100 shares was about 11.6. I paid 116.49 per share, and I bought 100 shares. I then set my stop loss at 108.34. Good till cancel, and this is good till cancel till July 17th. That's when the option expires, and this represents a 7% down from where I bought the shares, so that in case the stock retreats, I keep my capital. I basically sold. Then I immediately sold a contract, a 125 strike contract for 285 for expiring on July 17th. And the way this goes is, the proceeds from the option sale, 285. And then I have an upside profit potential of $864 for a total profit in 24 days. If the stock closes above 125, of $1,149, or if you look at the way it works, 2.4% return on the option And then on the upside, a potential of 7.4%, or a total return if it closes above 124 of 9.8%, which is basically 149% return for that period of time per year. So just kind of want to show you some other fundamentals on the stock. It is going to be reporting here pretty soon. Typically what I like to do is I don't like to own the stock when through reporting. So I intend to sell this stock before it reports on August 1st. The earnings per share changed last quarter. The earnings per share on this went up 88% last quarter, and the growth rate has been very, very strong, at least in this current year, of 66%. The annual return on the equity is about 21%, and the sales have increased 70% just this last quarter. So we're expecting a very good report in terms of earnings, but I don't want to be in it if there is a disappoint. So I'm playing on the likelihood that people will be anticipating growth in the stock, and then I will sell it right before the earnings in case there is a miss on the earnings. The industry group rank is really good at 16, and this is out of 197 different sectors. So it's where the money is moving into the market. Currently, it's almost at the all-time the range today about 114 to 117. So it's basically, it seems to be moving up, and the 52-week range is a little bit off its 52-week high of 127.78. That's the reason I sold the 125 call. There's a chance that it'll close in above 125 based on this 52-week range. So that's kind of just what I wanted to show you there really quick. Now, currently, I just want to show you what I'm holding as of today, and it does change. I don't hold that many positions. I sell them when they're ready, but this is currently my holdings right now: Netflix, Tesla, Vive, PayPal, Microsoft, and MFI. So those are my current holdings as of June 23rd. Now, by the end of the week, I suspect that I will have sold out of PayPal, and potentially also of Tesla and Netflix. Not sure. I may hold Tesla another week, but right now I have a 1020 call that I've sold on Tesla. So I may be out of Tesla, and I'm in and out of Tesla depending on how much I'm getting selling the options. So this is my current holdings as of the 23rd, as updated basically today at about 11 o'clock. And basically, Dallas Trading Floor is live on these other platforms. So without much more ado, I'm going to move over to your questions, which is really the reason I'm here in the first place. All right, so it looks like the market had a sell-off. Wondering what's happening. Well, I don't know if it's had a sell-off. Let me just kind of get my camera is sort of, there we go. Well, that's better. It was like, yeah, there we go. Yeah, unfortunately I've got everything running through one camera, but I also but on TikTok I have to use the cell phone. So sometimes it gets in front of the other camera. So that's what I was doing there. Looks like the market had a sell-off. Wondering if what's happening. Well, let's take a look. I think it might have had one towards the end of the day. Let me just kind of look. It looks like it's fairly good. Let me just switch over so you can see that on the screen. Let me just kind of switch over to that screen. I don't know. I don't think so. The one I'm seeing, and this is a current chart, this is right now, the NASDAQ was up today 1.1%. So I'm not sure where I don't think there was a sell-off in the tech. So let me just quickly look at the QQQ. The reason I look at the QQQ is because that covers the NASDAQ 100. And no, we're not. I don't think we've closed yet. Yeah, we're getting close to it closing, but it looks like it's gaining strength. So I don't know if there was a sell-off or not. I don't think so. That's not what I'm seeing, anyways. right now. So, you never know. All right. So, hey man, thanks for looking at me on Twitch. I so appreciate it. Thanks for looking at me on Twitch. I really like Twitch as a platform. All right, so let's see. Job 99. Can you suggest for me MFA? I have holdings in these stocks. Okay, well let me look at MFA here real quick and see what I'm seeing. All right, so let's look at MFA. MFA. And all right, so this is MFA Financial. Ouch. Goodness, you know what? I don't like this. I mean, I'm not trying to be negative here, because I'm wrong a lot of times too. But looking at this chart, I don't think this is one you want. If you want to stay in this sector, and I don't like the REITs at all. By the way, I think there's a coming problem. I think you want to be in this iStar, STAR, instead of MFA. But let me move back to the MFA chart and kind of, let's go through it real quick. It depends on where you got into this. It depends on where you're in this, but I don't like this. I don't like this kind of a chart. Here's the why I don't like this chart. If you're going to hang on, you're probably going to lose in this one, because here's the thing. This is the 200-day moving average. This is that black line here, as I'm pointing out with my pointer. This is the 50-day moving average, and you can see that's downtrending. Whenever there's a cross like this, where the 50-day moving average crosses the 200-day moving average, this is what they call the death cross. And it doesn't bode well for the stock. As you can see, it's moved down steadily, and it looks like it moved up a bit, but now it's kind of settling, and it's probably going to move lower. If depending on where I was in this, if you're in this, probably looks like you're probably in this at about $7. Wow, this is just too much of a loss. I would blow this puppy. I don't think it's going to get that much better based on this chart. Now it might. I mean, it always does, but this has got a relative strength of 2. Now, if you looked at the stock that I was recommending today, the one that I bought, it had a relative strength of 95. So that's a lot of difference. This is the reason why you got to be really careful when you buy stocks below $10 a share, because many times, it looks like a good deal, but you end up losing money. So I don't want you to lose money. I want you to make money. That's my whole thing. If I can help you make money, then you'll like me on YouTube. By the way, youtube.com/Dallas Trading Floor. Please like me. Please subscribe to my channel. That would be great. All right. So, yeah, thank you, Ann. All right. So, looks like, okay. I don't know. I don't think that. Okay. Thanks for watching on Periscope. I really like Periscope, by the way. Can you suggest for Beyond Meat and FTNT? Now, I'm not a fan of Beyond Meat. I'll be honest. I know that a lot of people really like Beyond Meat. I think, for a lot of reasons. I mean, it's a great idea. Synthetic meat products are a great idea, and it's got a great future. But I'm not a fan of Beyond Meat. But let me show you FTNT, Fortinet. I am a fan of Fortinet. FTNT. This is really a good idea here, and the reason it's so good is look at this. And I'm going to show you this chart right now. It's a stellar chart. I just want to show you. It's got a composite rating of 99. Now it's off a bit today. I mean, look, it's dropped $5.66 a share today. So definitely there's some profit taking going on here. But I think by and large it's good. Now, I wouldn't buy it if I had it now. I wouldn't. Here's the thing: if it goes down more than 7%, of course, always do the 7% rule and rip out of that. If you have it and it's going down a little bit, don't panic. I think this one's going to correct. This looks like some profit taking. I still like the chart. I wouldn't buy it because you never want to buy on a downtick like this. This is a downtick. You want to buy it when it's on an uptick. But it depends on where you're in the stock. it's looking like it is it's showing, it's showing it's settling on price. So let me blow up the chart here a little bit, kind of go over that really quick, kind of what I think, the action looks like on this one. Okay, here's the thing. It's got a relative strength of 93. That's excellent. The 50-day moving average, it's above the 50-day moving average. That's still excellent. It's above the 200-day moving, excellent again. And it's got a rating of 99, which is super. It looks like it's moved up a little bit too fast here. Yesterday, it moved up fast, and then there's a sell-off. I suspect you're going to see this thing strengthen before the end of the week. Expect, if you're not in it right now and you want to get back into the stock, I wouldn't buy it until it's moved back above the 140, 141 line. I just wouldn't do it because that would show more strength. But I don't think the stock is necessarily a bad one. So let's look at Beyond Meat here really quick. Just go over that one. It's BYND. The thing about Beyond Meat is that I think they're going to get increasing competition. Yeah, and they're down $6 today, which is, that's a lot. I'm a little bit less psyched on Beyond Meat than I am on Fortinet. There's a lot of competition in both of the categories, security and in the imitation meat business. So definitely it's coming. But I like this chart pattern. This is actually a very good chart pattern, by the way. You see the 40-day moving average moving above the 200-day moving average. There's a buying signal basically at the beginning of June here. So I think this one is not necessarily, I wouldn't give up on this one. I think that it's going to correct higher. It's just that in some of these stocks, people are going to be probably taking, some profits. So, you got to kind of, got to go with that. But as long as it doesn't violate the 7% rule, it isn't down 7%, then I think you probably want to stay in it. Then you kind of want to stay in it. Here's the thing about these kind of stocks. You don't want to get, and this is really hard depending on the size of your portfolio, but in these kind of stocks, these story stocks, and that's really what Beyond Meat is, you don't want to expose any more than about one full position. And what I mean by a full position is that if you have a $10,000 to invest, you have that much capital, you divide that by 8. You never want to have more than about 8 full positions. And then each one of those positions is equal to 1/8 of the, about $1,250 is the value of each full position. So if you're to go into a stock like Beyond Meat or Fortinet, you really don't want to purchase any more than about $1,250 worth of stock at any one time, because that would, for a $10,000 portfolio, because that would be one full position. I wouldn't go in this thing with any more than one full position. So that's kind of my take on that. All right. So, okay. Let's see. Lum, hey, what do you think about a covered call for FSLY? That's pretty cool. Yeah, that sounds like a nice one. Let's take a quick look at that potential covered call. So FSLY. I'm just going to look at the at the options chain. So I'm gonna go ahead and you're looking at the June 26th strike. Okay, great. So that's basically a Friday expiration. So let's take a look and see if I can pull this up here for you. Let me just put this up on the screen really quick and see if we can kind of go through it. See how much. All right. So let's see. Here's the thing. So you're looking at the strikes. Okay, here's what I would do on this one. Wow, that's not bad. Look at that. Wow, that's a lot of interest. The open interest here is 2233. That's super. Wow, and it's a $4 interest, and the price of the stock is $75. This is a super trade, man. Oh man, this is nice. Long you've got You've definitely got an eye. This is a trade I would do. I'm not in this one, by the way, but let's look at the actives and look at the most active calls. Let's see, June 26th. It's an 85 call. That's the most active. Okay. 85, 80 and 85 are in play. Let's just go back to the options chain and look at that. See if those are the. Typically, if it's a covered call situation, I like to be in the most actives because typically you'll get a little bit better price and it'll be a little bit more liquid. So this is the 75. Okay, so really, it's interesting. Okay, well, here's what I think that. Okay, 75. You know what? I would on this one long. I would sell this. I would buy Fastly 100 shares. That'll set you back about $7,500, but it's only for like 3 days, and then sell this option, and then I think you have a really winner trade. Yeah, it's a winner chicken dinner. That's a nice trade. That you pick up, almost $400 really for basically, if you do it right. I mean, you have 3 days to settle. Basically, you're riding on the company's money for that time, and you make a few $100. That's kind of good, actually. I like that trade. That sounds pretty awesome. Okay, you bought Imphy. Yes, I did. I certainly did. I made a trade on that. I can show you the trade. Actually, I have a slide of the trade that I actually made. So let me kind of go over to that one. It's sort of screwed up because I pulled it over from PowerPoint to I pulled it over from PowerPoint to Google Slides, and it didn't quite work out the best, but in terms of the graphics. But let me kind of show you this one, and let's blow it up a bit here. Yeah, there we go. Okay, so take a look at this one. This kind of gives you this is the exact trade that I made. So this is no embellishments or anything, and as you can see, I purchased the 100 shares today at 116.35 a share, 36 a share, excuse me, and then I sold the contract for $285. That was one contract. If the stock closes on July 17th above 125, this is the amount of gain that I'll make, $1,049, or about 149%. Now, is this guaranteed? No, but the chances based on this chart pattern are very, very good. So it's looking quite good on this particular chart pattern. Now, I have neglected people on TikTok, so sorry about that. Let's go back to TikTok. All right, so I'm still on Facebook. Hopefully, it will go up. Okay, well, don't give up on Facebook. Don't give up on Facebook. This is why I tend to trade in and out of Facebook, but I do think Facebook is a quality company. And let's take a look at the chart for Facebook. I just want to kind of go over that. It's probably, I guess it's. Here's the problem with Facebook. Well, it's up today, so no, this is. I know this is a winner. Look, it's up $3. Yeah, this is a great chart, man. Let me just show you what Facebook is. There's a lot of haters on Facebook, unfortunately. I don't know why. I think it's a great company. But let's look at that chart. It's number one in its group. That's super. It's 99 composite rating. I wouldn't give up on Facebook. I think it may be going higher. Let me see if I can blow this chart up a little bit. But look at that. Yeah, everything on this chart is really good. It's got an 85 relative strength. I just, we're a little bit past a buy point, but I think this is in a tight pattern. Yeah. This is a cup. This is a handle right here. This thing is going higher. I don't think you want to leave. I don't think you want to get out of. I don't think you want to get out of Facebook. I think I really like this. I really like this pattern. I think Facebook is a winner. And let me just kind of look here. Okay, so when is it going to report? Okay, on the 24th. Wow, this is coming up. Here's the thing on this. If you are in this, I would trade this and I would sell before earnings on 724, but I would be in this thing in probably until 720 time frame. So this looks very, very good. I like the Facebook chart. I'm not in it currently, but it's a good chart. So there you go. Okay, I bought 600 shares of FUV at 3.8. Should I keep them? Well, let's look. Just to see if I can give you a read on that. Um, FUV. Uh, okay, I have a feeling. Yeah. Okay. Here we go. Well, no, it's up strongly. It's now. Here's the thing on the Tesla-like stocks. This can be very. This is very speculative. So here's the thing: if you're at 3.8, I would sell this thing. Uh, I would sell this thing before, but the market just closed. But if this thing goes up tomorrow, I would rip out of this, and I'll tell you why. I do think this is going to correct down because it's had a spike up. So let me show you the chart really quickly. There's a lot of interest in this space because of course Tesla is done so well. But let me bring the chart up here and see if we can analyze it really quick. This is a very inexpensive stock. I typically don't like these only because they tend to be very spiky. As you can see, this is spiked up, spiked up, spiked up, spiked up, and it's spiked up today. But there seems to be a lot of interest in this stock. So I would wait and see how it opens tomorrow. If it opens up, if you are up, if you are up 20% off of what you paid for it, which would be well, see, that would be 38 times two. So you're looking at about 72 cents. So if you add 72 cents to what you bought it at, that's where you want to be ripping the cord to get out of it. But I do think it looks like it's moving higher. It's got a very, very nice relative strength. It's a little bit too cheap for me, but one of the things that is very, very good is you can see this 40-day, 50-day moving average cross the 200-day moving average, and that shows momentum to the upside. And as you can see, it's definitely seeing it in terms of the volume as well. So I wouldn't keep this for a long term. This is a trading stock. But if you've made 20 or 30% on this one in a few days, wow, that's a good deal. You can't do wrong with that. So let's see. Okay, that's FUV. All right. Hey man. Oh, maybe my trading view is glitched. Okay, cool. Well, K-notes, I appreciate it. Sometimes here's the thing. Here's the thing. These markets are changing really quick, and sometimes the feed is whack, and so you got to careful. So don't always trust your feed. Sometimes go to like a site like Nasdaq.com and look at that because their feeds are much more clean. Before you panic, because sometimes you'll look at that and you go, wow, God, how did it drop 20%? Well, then you go back and you find out, no, it didn't really do that. I just have, for some reason, the site isn't reporting correctly what the actual trading is. So you got to be real careful on that. So always have a backup site. That's another thing too. Don't always trust everything. Always have a backup site. And the really good backup site that I like to use is the Nasdaq site because they report everything and their feeds are the fastest. So, and it's free too, by the way. So you don't have to pay for it. So really, really good on that. Okay, FMCI is long. Let's see if I can give you a read on this one. FMCI. And okay, so this is former. Okay, this is interesting. Yeah. Okay. Okay. Looks like there's a little bit of a blank check company. Okay, these are really hard to gauge. I mean, if you know what they're going to invest in, it's one thing. The problem with the blank check companies, basically what we're talking about here is this. The way this company works is it's basically a capital. They took a shell, maybe some company that was defunct. They then funded it, and they're going to go out and they're going to acquire something. So right now it says Finance Blank Check Group. Well, that means that it's getting ready to invest in something. I don't know enough about this company really to say. It says for a merger to Corp. I don't know exactly what they're looking to buy. They're going to merge with one or more target companies. Well, see, that's the thing. It's just very vague. If I knew more about this one, I could give you an idea on it. Right now, it's just capital waiting to be invested. Doesn't mean it's bad. It's just I just don't know what it's investing in. So I can't really give you a read on that one, unfortunately. But I do. Thanks for the heads up. Sometimes these end up being really good, like the the shell company that merged with Nikola, that turned out really well. So that turned out really well. 47% gains. Penn National Gaming, nice. Penn National, symbol PNN, is really is going to do well when there's a look at that. Yeah, this is on anticipation of the reopening. This is not a bad chart either. So let me pull that chart up there, Arnold. Thanks again. I should probably do a in-depth analysis on it. I'm currently not in Penn National, but in terms of the gaming group, this is one of the best ones. I think that people when things reopen here, I think that Penn National is definitely one of the better ones. I think it's better than Wynn. I think it's better than a lot of the other ones. And look, it gapped up very nicely. This is a very strong sign. I don't know if you're in this right now, but I think that this is totally viable if it exceeds $40 a share, Penn National. But right now it's very strong too. So let me just kind of look at the idea. Let me look at how it how Penn National is looking. Yeah, okay. Nice relative strength at 97. Let's see what number one in the group is. I always look to see kind of what the target, what the number one is, just to kind of see how it stacks up. Yeah, this is Churchill Downs. Okay, that's interesting. Churchill Downs would be number one. But I think I like Penn National Gaming. I think this is a winner. I don't know if it depends on what they say for online gambling. So who knows I like DraftKings probably better than Penn National right now, but that's just my take on it because I think DraftKings is really in a good position. Okay. Is SHLL another Nikola scenario? Wow. Now here's the danger with in Nikola. They haven't produced. The constraint in the electrical vehicle market, by the way, everyone, is not the building of the actual vehicles itself. It's the batteries. And right now, there's really only one company in the world that has enough batteries, and of course, that's Tesla. And they, so anybody that's going into the space, you have to contend with that if it becomes more than just a blind pool like this. This is a blind pool. I can't really comment on this one. This is a blind pool. It looks like it's up after hours, 83 cents. I just don't know enough about this to give a read on it because they're basically looking to pool some capital and then merge with another company to facilitate an investment in the electric vehicle space, which is a great space, by the way. But the problem is, Tesla has such a lead in this space that I think it's going to be very hard for other companies. I really do. At least to do the same thing that Tesla has done, because I don't think that there's. Frankly, I think that even the biggest car companies like Toyota and Daimler-Benz, they're going to have trouble in this space too. They're going to have to spend billions of dollars to build their battery capacity. And right now, every battery that Tesla is building is being consumed by the Model Y and production. As a matter of fact, they had to delay the Tesla Semi because of the fact that there just weren't enough batteries to roll it out in any number, because everything is being taken up in the in their other products. So this is this is an issue that all other companies are going to have to contend with. Okay, so I just got out of FMCI, not bad for a week of hold. Yeah, 5% killer. Yeah, nice, nice. This is this is part of my strategy. I'm looking. What I do is I typically look for stocks that are going to, and I hope are going to move up. And then what I do is I try to go in on Monday, hold them till Friday, and then hopefully sell them. Now, the way I like to do that is not sell it myself, is to sell the call and then have the call basically take out my position. And that way I kind of put the making of the profits on automatic pilot. Does it always work? No, but it does work pretty good. Okay. Can you complain? Can you explain composite rating? Is 65 good? No, it's not. Let me show you a stock that has a composite rating. Basically, takes every aspect. Are the sales increasing? Is the market share increasing? Is the sector good? And it puts it all together, and it kind of puts and it rates it from 99 down to 1. Now, let me show you a stock that I recommended today. And as a matter of fact, I actually bought this one. It's IMPI. And let me just go ahead and put that up. And I just want to show you that one. So, well, did I get that right? No. Pull that back. IPHI. I should know what I'm buying, shouldn't I? IPHI. Okay, let me show you one that is a 99 rating. And this is the best. This is the best you can. No, this is 98 rating. So this is not quite the best. 99 is the best. So let me show you kind of what a 99 rating is here. All right. So this is the one that I bought today. It's got a 98 rating. So that basically this is basically in the top 2% of all stocks. Now, why is it there? Well, the reason it's there is because it is got an EPS that's going up. It's not going up as fast as some of those. The relative strength is excellent at 96 or better. Its group rating, the group that it's in, the semiconductor group, A+, that gives it the SMR rating, which is basically the marketability of the stock. It's A, and it's being accumulated by the funds at B+. So this is a stock that people are moving money into it, and it's got a composite rating of 98. Now, let me show you a stock that you would think would be good, but has a terrible composite rating, and that's ExxonMobil. So let's look at ExxonMobil. ExxonMobil is probably the best of all of the oil companies, but let's look at ExxonMobil. It's got a composite rating of 5. Now, this is one of the most valuable companies in the world, but are people buying this? No. Why? Because it's in an industry group ranking of 168. There's only 197 of these. So this is part of the strategy. You want to buy in the sector of the market where the money is moving to. The money is moving away from the oils. It's moving into the semis, and it's moving into the tech. That's why this, even though this is a great company, ExxonMobil is one of the best managed companies in the world. It has a composite rating of 5. I won't buy this, even if it's got the greatest numbers in the world. Why? Because nobody else is buying it. They're selling it. And so, my likelihood of success when that happens, when everyone else is selling and I'm buying, my likelihood of success, unfortunately, is not too good. So I don't like to do it that way. Anyways, Roku is forming a cup with handle. Let me take a look at the Roku chart. Roku is very interesting because I don't know if everybody out there is old enough to remember, but I don't know if you remember Dolby Sound. Well, at one time that was a big deal, and you bought a stereo system that had that Dolby Sound. Okay, so let's look at Roku here. So I'm going to go ahead and show you the chart on Roku, and there we go. All right, now number 1 in the category is Netflix. I own Netflix. Okay, now why do I own Netflix and I don't own Roku? Well, this isn't a cup and handle. This is a cup, but it doesn't have a handle yet. So let's look at Netflix. It's got a 53 composite rating. And even though it's in one of the best segments of the market, Roku is currently in the 40 industry group. That means it's in the top third of all of the groups. So that's definitely good. It's in the leisure business. But look at the difference between Roku and Netflix, which is the number one. So let's look at the number one with Netflix. Netflix has a 98, so it's in the top 2% of all stocks. Now, it's down a little bit today, a little bit after hours, about $1. But look at the chart pattern. It's a little bit different. As you can see, this is a true handle, and it's moving to the upside. A little bit adjust, but this is definitely a better stock. So would I buy Roku at this juncture? Probably not. I would probably buy. I know I did. I bought Netflix. I'd buy fewer shares of Netflix rather than more shares of Roku. Though I like Roku, I like to try to buy the very best because they typically get the better stocks get more love than the other ones, and that's what you're looking for. All right, current price. You will collect a premium when it hits strike or not. That is right. The only downside is that you capped your delegate. Absolutely. If Facebook goes up 10%, you were capped at 5%. Yes, that's right. But here's the thing. The way to make money in the stock market, I think, if you don't have a gazillion dollars, is to hit doubles and singles. That's what I'm interested in. I'm interested in getting in at the beginning of the week, hitting some doubles and singles, and just, if it goes over and it makes more than that, and I've capped my earnings, well, okay, I've capped my earnings, but I've still made the earnings. It's about hitting those doubles and singles, and you know what? That's the whole game. I play a cash flow game in that I try to make an X amount per week, and then and that's what I do. I go in, create that cash flow, and then I'm usually sold out of the stocks a lot of times on Friday, and that's okay. Somebody else has made some money. I'm not greedy. I just want to make part of the deal. That's my deal. Okay, so Roku I'm doing good, man. Doing good. Let's see. Okay, so would you mind explaining puts and calls? Absolutely. Okay, really, here it's really kind of simple. There's only two kinds of options. There is a call option and there's a put option. Well, I mostly deal with calls because 70% of the time people are dealing with calls. Now, what is a call? Well, let's say I own a stock like Microsoft and I think that it's going up, but I want to get the cash now because, I think cash in hand is better than not. So what I do is I sell the right to buy the Microsoft from me at a certain price. Let's say, for instance, Microsoft is selling, right now for 100 and let's say it's selling for $195. It's about 200 right now. I can sell the right to buy it from me in say 3 weeks time for $205. People will pay for that right. Now, when I've sold that contract, if somebody wants to exercise that, I have to sell it to them at that price. But what if the price of Microsoft doesn't go up enough? Well, I keep the premium. So that's kind of a good thing. Now, if it goes up to 130, 230 or something like that, well, I missed out on a little bit of that upward momentum. And that's okay because, I still got my premium plus I got the increase in the price of the stock. So that's how I like to play it. That is a call. A put is kind of the reverse of that. If I sell somebody a put, that means that I have to be able to buy from them at a set price. So let's say I sell somebody a put, let's say I sell them a 180 put on Microsoft for say an expiration in 3 weeks in time. Well, let's say Microsoft goes down to 170. Well, because I have sold this put, then I have the right I have the right to put my stock onto somebody else at that 180 price. So if it falls to 170, well, the person that I bought the put from, well, they have to buy it from me for 180. So that's the difference. That's the difference between the calls and the puts. And there's all kinds of strategies that you can use that you don't have to even use the underlying stock price to to make money on the stock. There's bull call spreads. There's bull call, bear call spreads. There's all kinds of things like that. And some of those I go over with, but I don't really have enough time right now to totally go into that. But I hopefully will be making some videos that'll kind of go through the basics of this. My YouTube channel is youtube.com/Dallas Trading Floor. And right now I just have the lives on there, but I hopefully am going to put some more information on there so that everyone can see. You can make up to 2 to 6% a week. Might sound like about 2 to 6% a week multiplied to 50. Absolutely. Here's the thing. I typically make on an average week, 5 to 10% or more on everything I'm trading. Okay, well that doesn't sound like a lot, but if I use margin, which I do on times, if the market is good, then I can double the amount that I'm making. So instead of getting 10% a week, I can get sometimes using margin, I can get 15 to 20% a week. Now, if you do this on a regular basis, you see you can very quickly make the kind of income that you can't make working for somebody. And that's actually what happened to me. I was a financial analyst and I worked for some very great companies, but I was making as much money trading my covered calls at lunch than I was making doing a lot of the hard work. So I just kind of said, well, wait a minute, I'll just kind of double down on trading these securities, and then I'll take the rest and I'll invest in something like real estate. And that's how it worked for me. So I'm not saying everyone can do that. I'm not even recommending it. But doing a covered call strategy on a weekly basis, man, I turn over my whole inventory typically every 2 to 3 weeks. I am turning over my entire inventory. So imagine if you have the faster you turn over your inventory, the more money you make. This is the concept in retail stores. This is why they have the discount bin of stuff that doesn't move, and that's why when you go into 7-Eleven, all the great stuff that moves and everybody wants is up by that category, by that cash register, because that is the velocity that they're moving inventory through. You can do the same thing in stocks, and it typically is a good way. And that's sort of the way I like to play it, because it's relatively safe and it generates a lot of cash flow. So covered calls are the best thing. Covered calls, if you really want to know how a lot of people make money in this market, covered calls, if the market's going sideways, covered calls could be just killer. There's another strategy that I like to employ around earnings time, and we're not in earnings time yet, but we will be, and I'll be talking about that. And that is bull call spreads, where you don't even have to own the underlying stock. So that's a really great way to go too. And it's kind of like 4 times a year, everybody basically says, okay, we're going to let you make money now, and you can do these over and over and over. It's rinse and repeat. And you can make money. Now, is it always this good? No. But right now, the market is very good, and you can make money. When the market was going down, I wasn't doing this at all. I wasn't selling covered calls. What I was doing is I was shorting the spider. So it depends on the market direction. That's why my first slide typically is always the market direction. That market direction is going to determine kind of the strategy you want to concentrate on. Right now, the market is moving higher, but it's sort of moving sideways. That's why covered calls is a good strategy. At least I think so. So, okay, what do you think about a calendar? I love calendar spreads, but it's sort of like your toolbox. What Long is talking about here is a calendar spread, basically selling one option, a call option, and then potentially buying another one with a different expiration date. There's a lot, you can go into a lot here, and I can go into a lot on this, but calendar spreads are great. It's just like a toolbox. There's certain strategies that you employ over and over and over again. It's just like, okay, when the market is doing this direction, you employ this strategy. When it changes direction, when it's moving down, you change the strategy. And these are all kinds of option strategies that are very powerful to generate cash flow. And that's kind of what I'm into right now, is generating cash flow But you can do position trading too, which is different, which is buying something, waiting for it to go up 20%, and then selling it. I typically like to force my profits by coming in where I don't need a 20% increase. I need 3 to 5 to 6% increase to make all the money. So that's kind of where I'm at. All right. So how about BlackBerry BB? It's funny. I have a friend that is actually a vice president over there. Very old friend of mine, Bob Day. I don't know if you're listening out there, but if you're out there, Bob, hey man, good. Don't be a stranger. Anyways, it's down a little bit after hours, up after hours. Here's the thing about BlackBerry. They really are somewhat constrained in their business model because of the dominance of Apple and the Android operating system. But they do have a very good franchise in the secure space, and I do think that's a very good play for people that need the security. I wouldn't be in this right now just based on the fact that I do believe that there's some better opportunities out there. But I do think it's not a bad company. It is a security play, which is good. In terms of the security space, there are some other ones that I think might be better. Let me just take a look at cyber. I haven't traded CyberArk for a while. I just kind of want to take a look at the chart because I haven't traded this one since last summer. Okay, yeah, it's down a little bit, but okay. So yeah, more competition. I think FTNT is probably the way you want to be. But let me just take a quick look there. I think instead of BlackBerry, I think you want to be in Fortinet. I think they're sort of doing it. Also, CrowdStrike. Let me just see if I can get something for CrowdStrike. I don't know if it'll see it there. Yeah. CrowdStrike. Anyways, I'm not getting the right chart. Anyways, I'm getting off on a tangent, going down a rabbit hole. So it's not a good thing. All right. So when doing a counter spread, do you need cash to cover? No, you just need the you just need the credit in your account. You can use margin to do that as well. So that is the answer to that. What about BlackBerry? Okay, so let's see. Okay, so I explained that a little bit, hopefully, somewhat. Okay, it's almost an hour. I've almost wasted an hour of your time. I just kind of want to bring up things here before I close here today, and that is, sign up for our trade alerts. It's free, and maybe it gives you some kind of ideas that you might normally not have. It's at DallasTradingFloor.com, or if you're listening on TikTok right now, just go to my profile, hit the little link, and it takes you right to the sign up page for that. Just put your information in, and you'll be getting all the trade alerts as they come out. Also, for everybody, I'm on Facebook. Which is I have a Facebook page now for Dallas Trading Floor. I'm also on YouTube at youtube.com/Dallas Trading Floor, on Periscope, pscp.tv/Dallas Trading Floor, and on Twitch. For the people that I'm on LinkedIn, I still have not gotten authorization to broadcast on LinkedIn, but hopefully that will be coming soon because there's a lot of people that might be interested in what I'm doing on LinkedIn. So appreciate everyone out there. Okay, so let's see. You just put your life saving into Hertz. No, please. Here's the thing about Hertz. I don't like to be the deliverer of news. Never buy a company that's issuing stock in bankruptcy, and that's the situation with Hertz. I just think it's too risky. There's just so many other better plays out there. I hope that's not true. Could you take a look at Datadog? I like Datadog. Datadog, DDOG, as its symbol is, DDOG. This has been doing extremely well. It's in a good space. So let me get a quote on it. Yeah, look at that, 98. This is the call. Yeah, this is the kind of thing you want to be buying. This is really good. Yeah, this is definitely a buy. Now, why am I interested? Why is this a buy? Well, first of all, look at its chart pattern. It's got a very nice chart pattern. It's not. This isn't as buyable as I'd like it to be. Typically, I like to see it in a cup and handle. I like to see some. This is basically going. Now, this can fall back. The problem with this chart pattern here is that it can fall back. If it's a cup and handle like this, and then there's a cup, then it's going to move higher, definitely. But this is still really, really good chart pattern. It's got a 98 composite rating. Just a really, really solid chart. 98 is the close. It's up 30 cents. This is probably going higher. I think I can say that without any more ado. I think this is definitely going higher. So I really like Datadog. I think it's a winner. I think it's a winner. So yeah, that's my opinion of it. What do you think of BA? Here's the problem I have with BA. I think that this was a once great company, and for total full disclosure, I once worked for Pratt and Whitney, which supplies aircraft engines. I didn't work in the aircraft engine division, working in the space propulsion division. But yeah, I don't think you want to hold this one. Let me just show you this. I know everybody loves Boeing, but let me just tell you something that's happened to Boeing very recently. There we go. Let me tell you something that's happened to Boeing very recently. SpaceX has put people into the International Space Station. This is something that Boeing couldn't do with twice the money. About several years ago, SpaceX and Boeing were awarded contracts to basically ferry astronauts up to the International Space Station. Well, SpaceX did it for $2.5 billion, which is a tremendous amount of money. And they actually did it. Boeing, on the other hand, spent $4 billion and still has not done it. This is kind of bad. If you think there's problem, unfortunately, the 737 MAX is not doing well. And, the orders, people are canceling. You're going to start canceling those orders. And also, I've heard, and I don't know if it's true, maybe it's just a rumor, there's problems with the 777 as well. So Boeing, even though it's the largest exporter in the United States, I don't want to own it. I don't want to own it because Tesla, which may end up becoming the largest exporter very soon, by the way, because basically they're selling all of the cars they're getting. Now, I know it's way expensive. It's like $1,000. But here's the thing. Do you know that Tesla now has the largest valuation in the automotive sector of any car company? It exceeded the valuation of Toyota, which was the biggest. Most of the cars that Tesla is making are built in Fremont, California, and they're being exported. So I suspect that within 2 years, Tesla will be a bigger exporter than Boeing. So I am not a fan of Boeing. I'm a total fanboy of Tesla. So there you go. So that's what I think of Boeing. I think it's a very hard way to make money. I think there's other ways that you can make more money in the market. Now, I did own Boeing. I bought it really basically when it was about I guess I got it about 89 or 90, and then I traded it up basically, and I was out at 145. So there you go. Okay, well, everybody on TikTok, take a look at me tomorrow. And also, if you want to sign up for the free alerts list, just hit on my link and just sign up there, and you'll be getting them along right when everyone else gets them. It's totally free. And I'll see you tomorrow on TikTok. And for everybody on Twitch, Periscope, YouTube, and Facebook, bye till tomorrow. I'll be back tomorrow, and if you want to go ahead and sign up for the for the trade alerts, it's Dallas Trading Floor. .com. Let me just push that up on the screen. And it's DallasTradingFloor.com. And so just go there, and I will get you on the list for all the trade alerts as I'm doing it. And again, everybody, I hope that you have a nice day and happy trading, and I will see you back on Dallas Trading Floor tomorrow.